been a crazy couple of days this week, so let's jump in, take a look at what's going on. The CPI came out today, pretty much in line with expectations, but inflation is still hot, running at 6%. So there's a couple of narratives out there. Number one, inflation is still way too high. So the Fed is definitely going to have to raise rates to keep battling inflation, probably 25 basis points versus 50. I think with the recent bank pressures and failures, I think that kind of took 50 off the table. But it did not take 25 basis points off the table. And yet another viewpoint in the market is that what we saw was a full-on Fed pivot and capitulation by the Fed, and the Fed put is back on, meaning the Fed is just going to prop markets up, prop banks up, prop everything up, that might be failing, and completely pivot, meaning stopping the hiking and potentially even cutting rates by the end of the year. A couple of people came out today and said that's kind of what they're seeing and expecting, is they're expecting the Fed to stop and pause the rate hike at the next meeting and start cutting by the end of the year, even with inflation at 6%. So nobody knows exactly what will happen. All we know is the reality of what we're facing and what we're seeing out there. And I know that you have not seen prices come down on anything. Gas has continued to go up a little bit. Food's gone up. Wages are going up. Prices are going up on everything. Used cars are flying back up through the roof again. New cars are going back up again because manufacturers are not keeping up with demand. They're making too much money to increase production. So we still have a lot of inflation to get through. Labor has not come down. Construction costs have really not come down. Some materials have, but costs are still running pretty high. So there's still a lot of sticky inflation out there in the housing market and the automobile sector. The automobile used car pricing showed a decline, but I think that's lagging. And I think the next print that's going to be back up again, because everything I'm seeing, used car prices are through the roof and people cannot get enough used cars to meet the demand out there. So, and then new cars are selling above sticker price again. So really interesting times. The Dow did finish up 1% today, S&P up 1.68, NASDAQ up 2%, because the market is interpreting that the Fed did pivot and that the Fed put is back on, meaning they're going to prop markets back up. So, fallout from the Silicon Valley Bank, a potential contagion, all those conversations. The banking sector took a beating the last couple of days, but rebounded big time today. Here's the Dow just kind of bouncing around here, trying to figure out what its next move is going to be. Same thing right here. That was the NASDAQ, the S&P, same thing, just kind of bouncing in this little range here, waiting for the next move. The VIX dropped all the way back down to 22 today, bounced back a little bit, started up around 27. So we need to watch the VIX and look for another return to that 30 plus level on the VIX for more declination in the market. Dixie's still down a little bit today. 10-year had a little bit of a rebound. Mortgage rates dropped 0.5% yesterday, rose 0.5% today. So it's just a wild swing in interest rates. And, these things are not normal. This is very, this is very troubled market behavior that you're seeing with the Dixie, with the Treasury, with mortgage rates, things like that. That's a distressed market situation. That's an unhealthy market situation. This price action we're seeing, things like that. These are not healthy market moves here. Bitcoin shot all the way up almost to 27,000 today, just about to take out this entire range here and return back to the lows of back here in May, where it was running around 27,800, but kind of got stuck in that 26.5 range, did not quite make it to 27,000 and has now retreated. So, what was this all about? Again, this was all about the Fed put. This was all about the narrative that the Fed was going to pivot, cut rates by the end of the year, prop up the banks and the markets, not let anything else happen. And then, of course, feeding the narrative of Bitcoin with banks failing. Everybody put your money into Bitcoin. So a lot of that hysteria and hype is what caused investors to come and jump into this. Of course, a lot of people were short here, liquidations. People went short right here at the peak. Again, liquidations, stop hunts, things like that. And then now retreated quickly. So, we'll see what'll happen. This might kind of trend this way in this area here from about 23 to 24/7, 23.5 to 24/7 for a few days while the market tries to figure out what the Fed is going to do and whatever else is lurking beyond the surface out there. But overall, it doesn't look like this is a systemic bank situation, just a few isolated banks that made some bad bets and did not hedge their interest rate risk. And then here's some pretty interesting price action on some of the banks. Credit Suisse dropped all the way to 238, rebounded up to 259, settled back in around 2. But the big ones, Zion Bank dropped, Zion Bancorp National dropped it to $22 the other day when, Monday when things were happening, rebounded all the way up to $36, kind of settling in here. So that was a nice little bounce. Western Alliance, this was a big one here. These things are starting to look like altcoins. Dropped all the way to $7, $7.72, bounced 400% to $39, and then has now since dropped. It dropped all the way down today to 22 and then bounced back up, settled in at that $29 range. This is Silvergate Capital. A lot of rumors out there why they were shut down. Somebody came out and said that, this was just an attack on crypto. I guess Barney Frank, who was on the board there, used to be a senator or congressman, I think, the Dodd-Frank Act, the Barney Frank of Dodd-Frank Act. This is Pacific West Bancorp, dropped all the way down. This was a good one to $5 yesterday, bounced all the way back up to $17. So again, another 400% jump. Yeah, 240% jump there. And then First Republic, another bank that's been under pressure, a lot of rumors running around. That one had about 182%, settled back down today. So a lot of activity going on in the banks, with these bank stocks. So let's go back here and take another look at Bitcoin, kind of settling in, and it could kind of rest in this range a little bit, maybe test this trend line again and see how things shake out over the next couple of days while we wait for the Fed to meet next week. And then, of course, we have Ethereum following the same price action. The altcoins didn't participate quite as much in the action as Bitcoin and Ethereum did. Some of them got a nice little bounce there, but everything's just kind of retreating now that the dust has settled and the markets start to digest and pontificate whether or not the Fed has given up the inflation fight and stopped tightening and is going to wait and let things settle in. My guess is, my thinking is, and the probabilities are that this was not a big enough break if nothing else happens between now and the next Fed meeting, that the inflation report and the recent jobs reports and economic data is enough to keep the Fed tightening, keep at the inflation conversation, while expressing that, as they said, they would rather risk over tightening because they have the tools to deal with things breaking in an over tightening situation, like they expressed over the weekend and showed over the weekend. So they're going to keep at it, keep tightening, get that inflation back down to 2%, and then deal with situations as they arise, like they did over the weekend. So those are the things that I'm looking at, and I'll see you in the next video.